Good afternoon, everyone. I'd like to welcome you to our workshop, our board workshop today. It is our annual audit workshop, and at this time I'd like to turn it over to our CFO, Tina Meunier.
Good afternoon, Chairwoman Robinson, board members, Mr. Pye. It's been a crazy 2020 year doing our audit. We have great auditors. This is our second year with our new audit firm. We've had to do things a little differently this year. We were missing Allison's face during our audit time, but we had Billy Saunders with us, and he just took it and ran with it and did great. And we have a great audit report for you, so I'll turn it over to our Elliott Davis members, Tim Grow and Kim Davis.
So good afternoon. Thanks for the opportunity to come and present the results of the audit this year. So for those who don't know or don't remember, my name is Tim Grow. I'm the audit partner, so I'm ultimately responsible for the results of the audit. What I usually do is I sit up here and take credit for the great work that my staff does, and I kind of make reference to them. But this year, I'm going to turn most of the presentation over to Kim Davis, who actually did most of the heavy lifting. Kim is a manager in our office and is specializes in school district audits, has been working with me for several years. And one thing I love about, Kim is very passionate about what she does, and she is like a machine. So as I got her to prepare for this, I promise you it'll be extensive, it'll be thorough, hopefully it'll keep you awake. But I'm going to turn this over to Kim.
Thanks, Tom. All right, so kind of just going through the objective of this discussion, background of our firm and engagement team. I probably won't spend too much time on that. Audit objectives and opinion, reporting required under government auditing standards, some financial statement highlights, and then we'll leave it open for some questions if you guys have. But please don't hesitate to interrupt us as we're going through if you have questions. By all means, we want it to be a dialogue. We don't want to just talk at you. So I don't have a slide necessarily about the background of our firm, but as Tina mentioned, it's our second year working on the district. I'm the manager on the engagement team. There's a wide variety of people who work on the engagement team throughout the firm, staff, senior level, all the way up to Tim as our wonderful partner. So like I said, probably won't go into too much more detail about that unless you have anything else you want to add on there. No. So our objective in an audit is to issue an opinion on the financial statements, whether or not they are materially correct, which we are happy to announce that we have an unmodified opinion on the financial statements for the year ended June 30th, 2020, which is the highest level of assurance we can provide. And kind of going through these following slides, it'll give kind of a little bit more color on what we do as far as the audit goes and stuff like that. But I did want to mention, and we'll get to this later, but we had no audit adjustments this year, so that's a great testament to how Tina and Billy and their team does. Everything was very clean when we got it, very easy to follow, so they do a phenomenal job. So I just wanted to thank you guys for that before I get too far into this.
Ms. Davis, can you repeat that one more time?
Yes, there were no audit adjustments. Tina, Billy, their team does a fantastic job.
So I will add this. So it's not uncommon whenever we do an audit to have audit adjustments. I mean, it's not a bad thing. One of the reasons we try to paint the picture for you is the records that we get. And if y'all have seen one of these financial statements, I mean, it's massive. We're talking about just thousands of entries. And the fact that we can come in and we don't find anything that we feel like it needs to be adjusted, it tells you that how good the data was when we got it initially.
Yep. So this part's kind of go through the required communications that are required to tell you about what we did, kind of go over the audit process in a little bit more detail. So audit planning process, we kick off the audit every year by talking with management, talking with the board, kind of going through updates to processes, getting an understanding of internal controls, and developing kind of our risk-based approach as to how we're going to address the audit, kind of the nature of our procedures, the extent, timing, various different things. But throughout the planning process, we talk through a lot of things. We look at some internal financials, look at historic data, lots of different things go into the audit planning process to come up with our ultimate plan to achieve the audit. Materiality is used throughout the course of the audit. And also, I forgot to mention, as I'm going through this, you guys have a small, not the financial statements, but the small one. Yep, this one. This kind of outlines this in more detail. I'm just going to kind of hit the highlights, but if you have any questions, like I said, please don't hesitate to ask. Materiality is used throughout the audit. We can't look at everything. Tim always likes to say that if we did, it would take forever and you can't afford that. So we do the best we can. But materiality, so we, based on our risks and all that, establish some materiality, certain thresholds that we'll look at, certain accounts. And some stuff could be qualitatively material, some stuff could be quantitatively. It kind of just depends. It all goes into our audit planning process and stuff that we look at and consider based on risks and stuff along those lines. I already kind of mentioned our responsibility under professional standards is to express an opinion on the financial statements. The significant accounting policies for the district can be found in Note 1 of the financial statements, which is the other big one that you guys have, which Tim mentioned is massive. And then just one thing to point out is there's always going to be management judgments and accounting estimates in any set of financial statements that you have. The two main ones that the district has, which is very common for all the districts that we work with, would be your uncollectible property taxes and the useful lives of capital assets. But nothing that's significant, no changes in estimates from the prior year. Everything looked reasonable from what we looked at. Financial statement disclosures, there's, forget, what do I cover on that? My mind just went blank.
So every financial statement, as you can imagine, the bulk of the basic financial statements are a bunch of numbers. Sometimes the numbers don't tell the entire story, so there's required disclosures that come after the numbers to kind of explain the numbers in more detail. So one of the things that we're obligated to do is to make sure the disclosures fairly represent what a user of the financial statement would expect to see in your financial statement. So we evaluate those disclosures to determine whether they're adequate, whether they satisfy traditional, GAAP of financial statements. So one of the things that may or may not be useful, we'll talk about this later. There's about, I think, 21 pages in your financial statements devoted to pension and OPEB. Now, I won't tell you that's a tremendously useful amount of information, but standards require that to be in there because a lot of bond rating agencies are evaluating whether, how they're going to rate your bonds, and they look at all this stuff to determine, what your future obligations are. So we try to make sure that all the disclosures are aptly presented in your financial statement.
And like I mentioned, we don't have any uncorrected or corrected misstatements. Management representations, there's a management rep letter that's in the back of that small book that you guys have. It's the management rep letter. There's certain representations that they're required to give us, and so you have a copy of that as to what they signed. Disagreements with management, happy to say we didn't have any. If we did, we would be required to report that to you. And there were no real significant issues discussed with management either. If there were, once again, we'd be required to communicate those with you. And so next, I think, is going over financial highlights. Does anybody have any questions on kind of the audit process or anything before I move on?
Now, the whole reason for this is we're obligated to tell you the story of how we go about doing an audit. It used to be we could just actually come here and just say that verbally, but standards have evolved where this has to be put in written form, so you have a documentation of the kind of sort of what the process that we go through. So that's the reason for this. Now she'll talk a little bit more about the actual financial statement itself.
Yep, so this one kind of points out the net position. So you've got your government-wide financial statements and then your fund financial statements. The government-wide are more similar to a normal business financial statements. It's got your fixed assets, accruals, stuff like that, whereas your fund financial statements are more on the day-to-day kind of thing. So your net position has to do with the government-wide financial statements, which you'll see it shows a deficit of $348.5 million, but I wouldn't focus on that because the two biggest things contributing to that are, as we mentioned, OPEB and pension. And I think we've covered this before, but basically you're required to put your portion on the financial statements. The district's never required to pay it back. It just has to show on there. So if you take those out of there, you actually have a pretty good net position, not a deficit. So just want to point that out. It looks bad on paper, but if you take those two things out of there, it's really good. So, and we kind of put there on too, so you can kind of see the total unfunded liability for the entire system, and then your portion of that within the state. And so this stuff all comes from PIBA. They're audited by another firm. They issue reports. We look at them and kind of they say what proportion based on contribution, stuff like that. And that's kind of where this number comes from.
Kind of give you a little color on that. district on pension and OPEB alone, just for the district's employees, just this district, you are $500 million underfunded on OPEB and pension. Now, I know that sounds, I mean, it's awful. I mean, it sounds terrible, but well, as I mentioned, I think I said, for those who weren't here last year, South Carolina is gaining ground on this. And one of the reasons that GASB is requiring this is because we've discovered throughout the United States that there are some governments that like 0% funded on this. So they're actually funding this on an as-you-go basis. The whole idea we believe behind these standards is for everybody at a granular level can push their legislators to let them know how underfunded it is. Now, the downside to this is we all know where this money is ultimately coming from, right? Which is why they keep inching up, the teachers' contributions. So what we're hoping and what we've seen is anytime or a lot of times when there's some maybe one-time money that becomes available at the state, we hope that they'll push it in this direction. But it's for information, and you're probably saying, well, why do we have to report that? I mean, that's just what GASB wants, because they know ultimately where the money's going to come from.
So next, kind of just talk about the general fund. Your total fund balance increased about $3.1 million from the prior year. Unassigned fund balance is $32.2 million, which is approximately just shy of 15% of the next year's budgeted expenditures. I think you guys have a policy that it has to be under 15%, so very healthy. State recommended minimum fund balance is at least 8.33% of general fund operating, which you guys are well in advance of that. This next slide is just kind of something that we typically put in there as kind of reasons why you would want to have a healthy fund balance in your general fund. The biggest thing I'm sure you guys probably know with the uncertainties in the economy, I feel like that's kind of the biggest driving factor right now, but there's numerous reasons that you would want to have a healthy unassigned fund balance in your general fund, which you guys do. So next, government-wide, kind of, I guess I could have put these slides in a little bit of a different order. We're going back to the government-wide statements. So revenues of $285.4 million increased about 4% from the prior year. The big driver of that is an increase in property taxes, and I believe you guys had an increase in millage rate, which kind of contributed to that, but also increase in values and everything. Increase in operating grants of $4.5 million, and then that increase is kind of offset by the impact fees, which were resolved early fiscal year 20, and then a decrease in charges for sales and services, which is primarily related, I believe, to the child care fund with everything going on and child care not being offered for the last third of, or quarter of the year, basically. For your expenses, they increased about 5% from the prior year. The big drivers is an increase in instruction and support services of $15.2 million, which is kind of what we would expect to see. That means most of your money is going towards the instruction of students and supporting their education. It's offset by a slight decrease in community services and other interest and other charges. Community services, once again, goes kind of along with the child care fund of stuff not happening the last quarter, thanks to the wonderful world we live in right now. Some highlights on some of the other funds, special revenue and EIA funds. I kind of combined these together, but there was about $36 million expended in fiscal year 20 for about 50 programs in those. That's where your Title I, your IDEA, all those various different programs are flowing through. You're constrained by the federal and state program requirements for most of these, so there's not really a fund balance for most of these programs, as most of the unspent funds either have to be returned or carried over to the next year, depending on the terms of that grant. Some just other items with financial highlights. Total outstanding debt was about $320 million at June 30th, 2020. It increased slightly from the prior year, mainly due to a new capital lease of about $16 million that you guys entered into in the current year for some, I believe, some technology equipment, offset by some principal payments on your existing debt. And then there's some general obligation bonds that you guys did. Majority of them were repaid in the current year, consistent with what you guys do pretty much every year. There's about $2.6 million left at the end of the year that matures in March of 2021. So that's kind of the financial highlights. Obviously that book is way bigger than what we just went through, so just kind of tried to hit the highlights there. Does anybody have any questions before I move on to kind of the last little bit? Okay. So this part's just talking about, so we talked about our opinion over the financial statements as a whole, and then this is talking about our 2 additional opinions that we're required to give for compliance reporting. So the first is required under governmental auditing standards, and it's based on our test of the district's internal control and compliance with certain laws and regulations. One thing to point out, though, is we don't give an opinion regarding the district's internal control. So we look at internal control and make sure that they're compliant, but we're not opining on their internal control. The second opinion is regarding their controls and compliance over federal award expenditures. So this is where kind of your Title I, IDEA, anything that comes from the federal government, any expenditures that are spent on those grants are required to be audited by the Single Audit Act. And so we give an opinion on compliance over major federal programs. So there's numerous federal programs out there, obviously, and then we are required to test a certain percentage of those, depending on what risk auditee is, prior year findings, that kind of thing. So this year we tested Title I, the Child Nutrition Cluster, and ESSER, which is basically CARES money, as our major programs. And happy to say there was no findings identified. One thing to point out, though, is we were a high-risk auditee, but that was due to the Title I finding that we had last year. So that's why we tested Title I again this year, and it required us to test more programs than we normally would. But no findings, everything was great. Both opinions were unmodified, so.
And the truth is, we did not have to test the ESSER grant this year. You didn't spend enough to make it qualify as a major program, but we knew it's going to be. So since it was new, one thing great about doing school district audits, a lot of the programs are very similar from year to year. Your district's very good about how it complies with Title I and IDEA and school food service, ITQ, all those programs, but we knew this was a little bit different. Just because it was different, we decided to go ahead and pick it also to evaluate how the district is spending those monies. So in anticipation of the big chunk of that being spent in this school year, but so far so good.
Yep. And so just kind of summarize, unmodified opinion on financial statements from us, sound financial condition as of June 30th, 2020. And then we have, our contact information is there. If you guys need to get a hold of us and you don't have these, I can send the slides to Tina after this too. I know Tina has both of our contact information as well. But does anybody have any questions?
Just a quick question. I know we've talked about in the past, the fee in lieu of stuff, the FILO, because I think that's something we've got to report, right? Is that in here somewhere?
It is. I get my glasses.
Is that the abatement? That is, I think we're back.
There's note 17 on page 77.
Getting there. Yeah, so just under $7 million, it looks like, from fee in lieu of. And again, I don't want folks to think that's necessarily, I don't know that it's good or bad, but I think it's important to know that programs that the county or the state are entering into are costing the district, in essence, $7 million.
That's right.
As of last year. So again, it's a data point to look at for us. And then the only other piece I was going to talk about, going back to the revenues, and there's a blurb in there about it, but it does talk about the impact fees. And so the number, just for the board, if you guys didn't see it, so roughly $2.7 million decrease from removing the impact fees earlier this year. And so it's just something, again, I think we probably need to look at and talk about and figure out how we either make that up or work with county council to do a new one, if that's the will of the board. I don't know. But it's just, again, that's a fairly large number, $2.7 million that could be going towards our facilities. That's not. So,
That's right.
The last thing I had, do you, as far as food service, do you guys look at that as well? How is that handled now? So now that we've got Sodexo on board, how does that work as far as like the auditing piece?
So there's two things about school food service. Is one, it's a major fund, so we audit it just by itself. And two, this year we did school food service.
Yep.
So this year it was also selected for single audit testing, which requires some additional testing beyond what we would, because we're issuing an opinion on each of the funds, and school food service is one of those. So We evaluate how, we look at the expenditures to determine whether we consider them to be reasonable for a program. We know that you outsource that. And as far as evaluating the contract, I mean, we looked at it. It looked in line. One of the things that we typically look at is your cost structure changing significantly from year to year? Do we see significant increases or decreases? And I don't recall us, and Kim, you might remember, I don't recall that being a significant issue because we went through the work papers, but I can certainly look into that. I don't remember that being an issue.
Yes, next to the start of
Okay.
fiscal year 2021.
Yeah, okay. Then we will look at it. I know that, yeah, okay, we did have a contract.
Thank you so much. Do any board members have any questions for, well, Mr. Grow, Ms. Davis, we appreciate it. It's so nice to hear we have such a good annual report, and I guess we'll see you next year.
And we'll always offer this, so it's a ton of data. One of the reasons we include our contact information is we're always available if you have questions or, you know, it's just a lot of stuff to understand. So, we do a workshop if you'd want us to. I've done that just before. Everybody, I won't tell you it's real riveting information, but I can talk about it for hours if you like me to. But we feel very good about it, good result. We can't say enough about your staff. About Billy, I've worked with Billy in other districts. It's a great ad, so you have a really good accounting department. So, thank you.
Well, thank you. We believe you. And we may take you up on that workshop.
Sure.
Thank you again. Okay, at this time, we will adjourn our workshop, and we will return at 6 o'clock for our regular board meeting. Thank you.